Coming up on today's show, administrators of South Africa's troubled national carrier SAA give workers deadline to agree to severance packages or risk termination of their appointments. Zimbabwe announces plans to open stock exchange in the resort town of Victoria Falls. Plus, Goldman Sachs remains bullish on oil prices in 2021, raises forecast for Brent crude to $55.63 a barrel. Hello and welcome to Business Incorporated. I am BC Adebayo. Let's start off with intraday numbers from the stock markets here in Africa, which are all in the red at intraday. The JSE index is taking the heaviest hit with a whopping 3.69% decline at intraday. In Nigeria here, the All-Share index was 0.27% negative at about midday. And in Egypt, the EGX 30 was also down 1.2%, while Kenya ended Friday's session down 0.37%. And the situation is not any different in the Middle East, as most of the markets in the Gulf region were in the red at intraday. In Abu Dhabi, the index was down 1.65%, while the Dubai FM was 1.11% negative at intraday. The Qatari index was 0.22% lower, while the Saudi index was the only one in the green, up 0.16% at intraday. Sell in May, go away is the motto in Europe this first trading day of the week, and stock traded sharply lower earlier on, rising U.S.-China tensions around the source of the coronavirus outbreak. Conrad Busin is ready to tell us more about today's market activities. Good afternoon, Conrad. It's good to see you again. So Asian markets have started the month of May on a sour note. Of course, May is already a month with a bad reputation among traders anyway. So how's the market in Frankfurt doing this Monday?
Well, BC, the traders here have to deal with a significant slump as well. I think this line that you can see right behind me is sort of misleading. It looks like a sideways movement, but that sort of hides the big slump that happened here already early this morning, a slump of 3% for the German share index DAX. Of course, sell in May, go away. This old saying is on everyone's minds now, in particular as the month of April was such a strong one for the stock market. Remember, the German index DAX gained nearly 10% in April. Now, of course, after this, the willingness among investors to take some of those profits off the table, some of those risks off the table is significantly higher than usual. Of course, behind this risk averseness is negative data from the economy. We've been getting purchasing managers indices for all over Europe today, which indicate how big the slump was in April, in particular here in Germany, also in France in the manufacturing services sector. Adding to all this is the spat between the United States and China, which seems to be flaring up with those very negative statements coming from the US president and from the Secretary of State, the Foreign Secretary in the US over the weekend. That makes a lot of people on the markets nervous.
Meanwhile, Conrad, Germany is slowly returning back to business, with hairdressers allowed to reopen today and many retailers trying to get customers back into their shops. How's that going?
So, I would say. You know, it's not so that, the fun in shopping has returned with the slow opening of shops. If you want to enter a shop here in Germany, you need to wear a protective mask. Also, smaller shops only allow 2 clients at a time into the premises. Many shops find it very difficult to get enough of the PPE, the personal protection equipment for their staff. So, this return to open is not really a return to normal, I have to say. Also, of course, we have to keep in mind many people in the country are keeping their money together with the very uncertain outlook for the economy, the uncertain outlook for jobs. People in Germany, a majority of them think that this is really not the time for elaborate consumption.
Now, the car sector is also super important for Germany's economy, and the car makers are lobbying very hard for the government to help it financially. How's this being discussed among traders and in the German public?
It's interesting, if you talk to financial people and to people in the streets, you get a very diverse picture. Many people in the business world and in the financial world understand that the situation of the car sector is really bad. They look at the very bad numbers. For example, IFO, our research institute here in Germany, just came out with a survey from the car sector, which at the moment is only operating at 45% of its capacity, and the sentiment index in the car industry here in Germany has slumped from minus 13 points in March to minus 85 points in April. So there is a lot to say for this argument that the situation in the car sector is so bad that it really needs help. On the other hand, if you talk to people in the street, there is not really a majority of people in favor of, for example, a cash for clunkers program like we've seen in the last recession in 2008 and 2009. The situation is very different, especially as, you know, the car sector at the moment is really in this huge transformation towards electric driving. Most people in Germany are convinced that if you pay subsidies to the car sectors, you should pay subsidies in order to help with this transformation. And one more important point, the public transport sector really is in deep trouble here in Germany as well, all over Europe generally speaking. But the German railway operator Deutsche Bahn just talked about that it needs 10 billion euros extra this year because it's basically running empty trains right now. So many people here in Germany are convinced that the public transport sector needs help as well.
Everyone needs help and everyone needs to stay safe. Conrad, thanks for those updates and we'll see you again soon.